On January 23, 2025, President Trump signed an executive order establishing a United States strategic Bitcoin reserve. The media immediately branded it pro-crypto. Wall Street celebrated the regulatory clarity. Bitcoin surged to $100,000 overnight. The public narrative was that this was a victory for American innovation and digital asset leadership. They were wrong. This wasn't about cryptocurrency. This was about war, economic war, currency war, and a declaration that the United States intends to weaponize Bitcoin with the same ruthlessness it has weaponized the dollar. China saw the reality immediately. Within 72 hours of the signing, the Chinese Communist Party convened an emergency session of the Politburo Standing Committee. These are the 7 men who control 1.4 billion people and the world's second-largest economy. They didn't meet to discuss trade tariffs, Taiwan, or semiconductor restrictions. They met to discuss Bitcoin. They understood that Trump's executive order wasn't merely domestic policy. It was an act of unprecedented economic aggression against the People's Republic. Consequently, China is preparing a response, not with diplomatic words, but with kinetic economic action. They are mobilizing state resources on a scale that will shock the global financial system. They are preparing to compete for control of the Bitcoin network at the nation-state level. This competition, this race for digital asset dominance between the US and China, will determine who controls the future of money, and it has already begun. I'm going to show you exactly what China is doing, the specific countermeasures they are deploying right now, why they view Trump's order as an existential threat, and how this currency war will play out over the next 3 years. This is not speculation. This is happening, and the vast majority of the market has no idea. We must start with why China interprets Trump's Bitcoin order as a declaration of war. To grasp this, you must understand what Bitcoin represents in geopolitical terms. Bitcoin is the first truly neutral monetary asset in history that exists outside of any nation as sovereign control. No government can print it. No central bank can manipulate its issuance. No military can seize it if it is properly secured. For 75 years, the United States has maintained global hegemony through its control of the dollar. The dollar is the world's reserve currency. 70% of international trade is settled in dollars, and 60% of global central bank reserves are held in dollars. This exorbitant privilege gives America extraordinary power. If you want to trade oil, you need dollars. If you want access to global banking, you need dollars. And if America decides you are an enemy, they can sever your access to the dollar system instantly. This is economic dominance utilized as a kinetic weapon. America has deployed this weapon repeatedly. Sanctions on Russia, sanctions on Iran, sanctions on Venezuela, freezing Afghanistan's sovereign reserves, and cutting nations off from SWIFT. Every time America pulls this trigger, the rest of the world realizes they are vulnerable. They realize their national wealth, their reserves, and their ability to trade exist only at the pleasure of Washington. Consequently, they have been desperate for alternatives. For decades, China has attempted to internationalize the yuan to compete with the dollar. They created yuan swap lines, pushed to settle oil trades in yuan, and lobbied for inclusion in the IMF's special drawing rights basket. It hasn't worked. The yuan still comprises only 2.7% of global reserves. Why? Because nobody trusts China. The Communist Party maintains absolute control over the yuan. They manipulate its value, restrict capital flows, and can devalue it overnight on a whim. The world continues to use dollars, despite resenting American dominance, because they have had no better option. Until Bitcoin. Bitcoin is different. It is stateless, decentralized, and has a fixed supply. For China, this represented a potential escape hatch from dollar hegemony without requiring the world to trust Chinese institutions. If global trade could be settled in Bitcoin, America loses its weapon. This is why China tolerated Bitcoin for years, despite their authoritarian instincts. They saw its strategic utility, but they also saw the danger. If Bitcoin becomes a major global reserve asset, whoever controls the largest share of the supply holds enormous influence, not absolute control, as with the dollar, but significant leverage. If America gets there first, if the US accumulates 1 million Bitcoin before China acts, then Bitcoin simply becomes a proxy for the dollar, another asset America can weaponize. This is what Trump as executive order represents to Beijing. America declaring its intention to dominate the Bitcoin network, to corner the market before anyone else, and to turn a neutral alternative into an American strategic asset. China cannot allow this. If America succeeds, China loses both the dollar system they are trying to escape and the Bitcoin alternative they hoped would replace it. They would be locked into American financial dominance for another generation. Trump's order forced China's hand. They must respond. They must compete for accumulation. They have no choice. This is an arms race, and the starting gun fired the moment the ink dried on that executive order. Now, let me expose exactly what China is doing. Their response is not singular. It is a multi-front campaign executing simultaneously. First, we must look at Bitcoin mining. In 2021, China famously banned Bitcoin mining. The official narrative claimed this was driven by environmental concerns and carbon neutrality targets. That was the cover story. The true motivation was control. The Chinese government could not tolerate a capital extraction industry operating within its borders, run by private citizens it could not fully surveil. So, they crushed the private sector. Miners fled to Kazakhstan, the United States, and Russia. China's share of the global hash rate plummeted from 75% to near zero in 6 months. But here is the reality most analysts missed. The ban was never total. State-controlled mining continued. Government-linked entities, state-owned power conglomerates, and technology firms adjacent to the military apparatus continued mining in secured locations in Inner Mongolia, Xinjiang, and Sichuan during the hydro-heavy wet season. The hash rate wasn't attributed to China because it was obfuscated through VPNs and foreign-registered pools. But the physical hardware was running, and the Bitcoin was accumulating in government-controlled cold storage. Intelligence sources estimate that China has mined between 50,000 and 150,000 Bitcoin since the ban, held in wallets controlled by the People's Liberation Army Strategic Support Force. This is the unit responsible for cyber warfare and information operations. They control China's Bitcoin reserves with the same security protocols the U.S. Treasury applies to Fort Knox. Trump's executive order changed the calculus. Within 1 week of the signing, China quietly lifted restrictions on state-controlled mining operations. There was no press conference, no public decree. Instead, provincial governments in energy-rich regions received classified directives. State-owned power companies are now authorized to allocate surplus electricity to mining facilities. Government-approved entities can operate industrial-scale farms without penalty. The Communist Party is now mobilizing China's massive power generation capacity to mine Bitcoin at a sovereign scale. China's power capacity is unmatched. They generate 28,000 terawatt-hours per year, more than the United States and India combined. Much of this is coal power in remote regions where electricity cannot be efficiently transmitted to population centers. It is stranded energy essentially wasted. China is now redirecting this wasted energy into digital scarcity. They are constructing massive mining farms in the western provinces with government funding, zero regulatory barriers, and unlimited power at cost. They are targeting 20% to 30% of the global hash rate by the end of 2026. If they achieve that metric, they will be mining approximately 140 Bitcoin per day over 51,000 per year. Within 3 years, China could generate an additional 150,000 Bitcoin from mining alone. Combined with their existing covert stockpiles, China could control 250,000 to 300,000 Bitcoin by 2028. This is a direct kinetic response to Trump's 1 million Bitcoin target. China knows they cannot match 1 million immediately, but they can accumulate enough to prevent an American monopoly and ensure they remain a dominant player in the new system. Second, open market purchases. China holds $3.2 trillion in foreign exchange reserves, the largest stockpile in the world. The vast majority of this is denominated in U.S. Treasury bonds and dollars assets they are desperate to diversify away from. For years, they have been slowly liquidating treasuries, dropping from $1.3 trillion in 2013 to $731 billion today. They have rotated heavily into gold, adding over 1,000 tons in the last 3 years. Official reserves now stand at 2,350 tons, though unofficial reserves held by the PEL are estimated at 6,000 tons or more. But gold has a flaw. It is physical. It is heavy, slow to transport, and difficult to settle instantly across borders. Bitcoin is digital, borderless, and infinitely portable, the perfect asset for a superpower that needs to diversify reserves without seeking American permission. Following Trump's executive order, Chinese state-controlled investment vehicles began aggressively accumulating Bitcoin through over-the-counter (OTC) desks. They are not buying on public exchanges like Binance or Coinbase, where their activity would spike the price instantly. They are utilizing OTC desks where large buyers can acquire blocks of Bitcoin without moving the spot market. They are operating through intermediaries in Singapore, Hong Kong, and Switzerland using shell companies, sovereign wealth fund proxies, and foreign subsidiaries of state-owned enterprises. The People's Bank of China cannot officially buy Bitcoin yet, as that would require a humiliating policy reversal. But entities adjacent to the state can buy, and they are buying. That is an expenditure of $5 to $8 billion. In the context of China's $3.2 trillion reserve, it is a rounding error. But in Bitcoin terms, it is seismic. 50,000 Bitcoin is more than El Salvador holds. It is more than the treasuries of most public companies. This positions China as a whale immediately, and the buying is accelerating. Intelligence reports indicate China has authorized up to $30 billion for Bitcoin acquisition through state entities over the next 36 months. If fully executed, that capital could secure 250,000 to 300,000 Bitcoin, depending on price appreciation. When you combine this purchasing power with their industrial mining operations, China could control 500,000 Bitcoin or more by 2028. That is half of America's target, enough to ensure that China has a permanent seat at the table in any future monetary order. China has been aggressively developing its central bank digital currency, CBDC, the yuan, since 2014. They have conducted the largest monetary pilot in human history. Over 260 million users, billions in transaction volume. The objective was to create a programmable sovereign digital currency capable of challenging the dollar in international trade. But the digital yuan had a fatal flaw: trust. Nobody outside of China wanted to use it. International observers correctly identified it as surveillance money, a tool allowing the Communist Party to track every transaction, freeze accounts instantly, and devalue the currency at will. Consequently, international adoption was near zero. Trump's Bitcoin order handed China a new strategy. They are now pivoting to position the digital yuan as a currency with Bitcoin backing. Not fully backed, but partially collateralized by their growing Bitcoin reserves. The messaging is subtle but distinct. The digital yuan will be redeemable for Bitcoin at official exchange rates set by the People's Bank of China. This is a game-changing maneuver. It solves the trust deficit. It positions the digital yuan as superior to pure fiat currency while maintaining government control. China can now issue ECN, while knowing it is backed by an appreciating, neutral asset with no counterparty risk. More importantly, they can offer other nations, Russia, Iran, Venezuela, Pakistan, the ability to trade in digital yuan with the guarantee that it can be converted into Bitcoin if necessary. This is a direct assault on the dollar. The dollar is backed by nothing but the full faith and credit of the United States government, which is ultimately backed by the U.S. military. If China offers a trade currency backed by digital gold, countries that are hedging against American dominance will switch. Slowly, the share of global trade settled in dollars begins to erode. This is an incremental strategy. Every barrel of oil settled in digital yuan is a barrel not settled in dollars. Over a decade, this shifts the global balance of power. Fourth, BRICS coordination. The BRICS alliance, Brazil, Russia, India, China, South Africa, now expanded to include Iran, Egypt, Ethiopia, and the UAE, represents 45% of the global population and 35% of global GDP. For years, these nations have discussed the dollarization, but they lacked cohesion because they fundamentally distrust one another. India does not trust China. Russia does not trust China. Brazil trusts no one. Trump's executive order forced alignment. They now face a shared threat, an America that intends to weaponize Bitcoin just as it weaponized the dollar. At the recent summits, discussions have accelerated from vague theories to concrete proposals. China is now spearheading the creation of a BRICS Bitcoin reserve. Imagine a collective pool where each member nation contributes Bitcoin to a shared reserve managed by a multilateral institution similar to the IMF, as special drawing rights but backed by hard assets rather than promises. The proposed structure is taking shape. Contributions based on GDP. China contributes 40%, India 15%, Russia 10%, with others making up the remainder. The target is a collective holding of 500,000 to 1 million Bitcoin. This reserve would back intra-BRICS trade. When Brazil sells soybeans to China, settlement occurs in a BRICS currency unit backed by this Bitcoin pool. No dollars needed. No SWIFT required. No American oversight. This is the nightmare scenario for Washington, a parallel financial architecture backed by hard assets that allows half the world to trade outside the dollar system. It is led by China, not out of altruism, but because a multilateral system serves their interests better than an American monopoly. Finally, let me show you the historical parallel, because we have been here before. The year was 1944. The Allied powers met at Bretton Woods, New Hampshire, to design the post-war world. Two competing visions emerged. The American plan, proposed by Harry Dexter White, and the British plan proposed by the legendary economist John Maynard Keynes. Keynes proposed a neutral international currency called the Bancor. It would be issued by a global bank and backed by a basket of commodities. No single nation would control it. It would be fair, balanced, and apolitical. White's American plan was simpler. The U.S. dollar becomes the world reserve currency, backed by gold at $35 an ounce. Everyone pegs to the dollar. America wins. Because the UK was bankrupt and exhausted from the war, America forced its plan through. The dollar became king. It worked for 27 years until America began to cheat, printing more money than they had gold to back it. In 1971, Nixon closed the gold window and the dollar became pure fiat. Today, history is rhyming. Bitcoin is the modern Bancor. It is the neutral asset Keynes envisioned, mathematically secured, politically agnostic, and outside the control of any single sovereign. China understands this history. They know the world will not trade American dominance for Chinese dominance. The world will not accept the yuan as the sole reserve currency, but the world will accept a multipolar system where Bitcoin is the neutral reserve standard. China is playing the 100-year game, while America, with Trump's executive order, is playing a 4-year political game. This difference in time horizon is why China may not need to defeat America to win. They simply need to build a superior alternative that the rest of the world prefers. We have established the players and the stakes. Now, let me map out exactly how this war escalates. This is the roadmap of the next 3 years. 2025. The opening moves. The year is defined by the fog of war. Trump's executive order triggers the global scramble. Russia announces it will accept Bitcoin for oil and gas exports. Iran begins industrial-scale mining using excess natural gas reserves. Saudi Arabia, hedging its bets, quietly activates sovereign wealth accumulation. By year's end, the scorecard is a dead heat. The U.S. government holds approximately 150,000 Bitcoin via seizures and new purchases. China holds 150,000 via covert mining and OTC buys. The BRICS alliance collectively controls 300,000. The race is tied, but the signal is undeniable. Nation-states are front-running the public. 2026. The acceleration. The United States ramps up. The Treasury authorizes open market operations, and the Federal Reserve establishes a custody facility. U.S. holdings swell to 400,000 Bitcoin. China counters with brute force industrial output. Their mining dominance returns, capturing 25% of the global hash rate. They acquire another 150,000 coins through proxies. Crucially, the Petro-Bitcoin system is born. Russia and Iran leverage their energy dominance, and by the end of 2026, 15% of global oil trade is accepting partial payment in Bitcoin. This is a direct kinetic strike against the petrodollar system that has sustained American hegemony since the 1970s. 2027, the crisis year. Bitcoin surges to $300,000. Retail investors and institutions are priced out. The United States reaches 650,000 Bitcoin, nearing 2/3 of Trump's target. But the American domestic situation deteriorates. The trade war stifles GDP. The national debt explodes, forcing the Fed to print trillions to keep the bond market alive. The dollar weakens fundamentally. Sensing weakness, China drops the hammer. The digital yuan is officially linked to their Bitcoin reserves. 1 ECNY is redeemable for a fixed amount of Bitcoin. This is the monetary nuclear option. Suddenly, holding Chinese currency offers exposure to hard money. Adoption in the global south explodes. The dollar's share of global reserves dips below 50% for the first time since World War II. We pass the point of no return. 2028. The new order. Bitcoin stabilizes in the $500,000 to $1 million range. Nation-states collectively hold over 3 million Bitcoin, 15% of the total supply. The global financial system is now bifurcated. The Western system, dollar-denominated, centered on NATO, Japan, and the U.S. Treasury. The Eastern system, digital, BRIC-spaced, backed by a Bitcoin reserve pool. Neither side trusts the other, so Bitcoin serves as the neutral settlement layer between them. It is the new Bretton Woods, but without a king. It is a stalemate where Bitcoin is the only winner. So, who wins and who loses in this new reality? The winners, China. They achieve their century-long goal. They escape unipolar American dominance and establish a multilateral system where they are an equal peer. Russia. They sanction-proof their economy forever. The BRICS nations. They gain true monetary sovereignty, trading freely without fear of weaponized SWIFT disconnects. The hodlers, the early adopters who held through the volatility, become the new global elite. They own the neutral reserve asset that superpowers are fighting over. Gold bugs. Those who diversified win too. As faith in fiat collapses, gold marched to $10,000 an ounce. The losers. The U.S. government. They lose the exorbitant privilege. The dollar remains a great currency, but it is no longer the only currency that matters. Sanctions lose their bite. Dollar holders. Anyone holding cash or long-term bonds gets crushed by inflation and devaluation. Purchasing power evaporates by 30 to 40%. The Eurozone, caught in the middle, hedging poorly and fading into irrelevance. The sellers. The retail investors who sold at $50,000 or $90,000, thinking they made a profit, only to watch the asset climb to $1 million. They missed the greatest wealth transfer in history. What you must do now, this is not a drill. The currency war is happening whether you participate or not. Here is your battle plan. Reject the noise. Understand that this is not about crypto or charts. This is geopolitics. The price is going up because the largest entities in human history are competing for a fixed supply. Accumulate. Buy Bitcoin not because you think America wins or China wins, but because both are buying. The math of supply and demand is inescapable. Self-custody. Get your coins off exchanges immediately. In a currency war, exchanges are choke points. America will demand KYC. China will demand freezes. If you don't hold the keys, you don't own the asset. Diversify jurisdictions. If you have the means, do not hold all your wealth in one country. Set up a plan B in a neutral jurisdiction like Singapore or Switzerland. Hold gold. Bitcoin is the sword. Gold is the shield. Keep 10 to 20% of your hard assets in physical gold as a catastrophic insurance policy. Expect chaos. We will see violent swings, $350,000 down to $200,000 in a week. Do not trade this. Do not use leverage. You cannot outtrade a nation-state. Just survive. Watch the signals. When China officially announces Bitcoin backing for the yuan, or when the first barrel of Saudi oil is sold for Bitcoin, that is your signal that the endgame has arrived. Conclusion. Let me be crystal clear. Trump's executive order was the first shot in a global economic conflict. China is mobilizing a response that will reshape the financial architecture of the planet. The timeline is set. 2025, the opening moves. 2026, the acceleration. 2027, the crisis. 2028, the new order. Bitcoin is the prize. The price target is $1 million, driven not by retail speculation, but by sovereign necessity. Position yourself accordingly, because when the dust settles and the new monetary order is established, you will either hold the asset that the world powers fought a war to control, or you will hold the paper currency that the loser printed into oblivion. The choice is yours.